Commercial property deals have slowed. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. I have my stein of coffee, and I thought I'd have a look at two articles today from the Financial Review that have been shared by Commercial Real Estate. Now, the first one we'll look at is just the slowing in commercial property transactions and trades and deals, wheeling and dealing, because, well, I think it's quite an indicator of just the demand for office and where this part of the commercial industry is going to go. That'll flow through the valuation of these buildings. That'll flow through to the investment trusts that have invested in these buildings. That will flow through to the construction sector, particularly refurbishment, because a lot of these buildings, they need to attract their tenants. They need to get people in there. One strategy is to cut it up into lots of smaller offices rather than bigger floor plates. Put more money into these little fit-outs, jazz them up, make them look sexy, make them look nice. Another is to try and rent it out as hot desking, like good old WeWork. You know, that landlord company that pretended to be an innovation? And another is to leave them empty. So we'll have to see. We'll have to see what happens. So if there's slowing movement in there and more competition in this sector, it could lead to two things. Maybe it could lead to some spur or some additional work for people working in the construction sector, in the fit-out space. But the problem is, it's not quite that easy to pivot from domestic construction, doing houses, to commercial office fit-outs. It's very different. There's another level to it. It doesn't help that all of our standards, that are laws, pretty much cost a lot of money. So let's have a look at this article. Deals flow slowed as the pandemic spreads across the country. Investment in Australian commercial property slumped by close to half in the first quarter as the impact of the pandemic outbreak spread across the Asia-Pacific property markets. The volume of deal flow dwindled by 47% to 2.16 billion year-on-year over the first quarter, according to Real Capital Analytics. The number of transactions slipped by around the same proportion to 47. It was a similar story in the much larger commercial property markets of Japan and China, where transactions dropped by 42% and 67% respectively. South Korea remains the region's standout market so far this year, with double-digit growth in investment volumes in stark contrast to most other major economies in the region. Wow. There you go. It must be K-pop. Sure of it. It's the K-pop effect. That's it. So far, there have only been few indicators of deals being terminated, suggesting that investors are adopting a wait-and-see approach rather than entering panic mode, said David Green Morgan, RCA's Managing Director of Analytics for Asia Pacific. The wave of the pandemic is further along in Asia Pacific than other regions, and most signs suggest that APAC may already be at or near the bottom of the investment slump. So relaxed restrictions. China already started to relax restrictions on its population as early as March, and if other countries are able to follow suit without unleashing a second major outbreak, the economic downturn may be shorter. But here's the thing, guys. Here's the thing. Isn't there apparently more lockdowns looking at returning to China? 100 million people potentially? And it all comes down to consumer confidence too, and investor confidence and business confidence. Here in Australia, I'll bring up business confidence, guys. It's not doing too well. It's crashed. All eyes are on the few economies within the region that appear to have the virus under control, which may give us the clearest view of the road ahead. One of the few big deals to go ahead in the local market since the first quarter was the $644 million acquisition of a half stake in one of Melbourne's best-known skyscrapers, Rialto Towers by Dexus and Singapore's GIC. The Rialto transaction in early April was struck on a fully leased yield of about 5%, a little softer than when it had first been put together before the pandemic started. By contrast, a near $1 billion deal by Macquarie to sell down, or a near near -1, to sell down an office tower from its Martin Place development to ISPT fell over last month because of becoming a high-profile casualty of the economic impact from the pandemic slowdown. Well, there you go, guys. A hit to the largest investment bank in Australia, isn't it? The RCA analysis noted that while the weakness in investment sentiment in the first quarter pervaded all property sectors, industrial assets were the most insulated. Volumes for logistic assets fell by a relatively modest 10% in the Asia-Pacific region, in contrast to declines of more than a third of the other property sectors. So Stockland's move to shore up that part of their business, to invest more in that we looked at earlier, or last year even, where they were pretty much decanting $1 billion out of their shopping centers or retail into logistics, seems to have been a very smart move. Investors have already been retreating from office and retail properties over the past 12 months, and the pandemic has exacerbated this slide, the report said. So see, here's the thing. When people are expecting it just to return to norm, this is just exacerbating the issues that were already prevalent in the market. So for those of us that have been watching, reading these articles and looking at what's been going on for a little bit while, you can see, like this little sentence here right at the bottom of the article that some people may not even get to. So let's have a look at, an alternative, a sector that is a little insulated from it, Canberra. And we'll jump over to a very useful website, which is the data room from the Property Council of Australia. And let's look at, what do we want to look at? Office buildings. And we will look at office vacancies. And we'll change. This is Australia. Look at that. Look at 93. The recession Australia had to have 20% vacancies. Let's have a look at Canberra. I just love showing this because there you go. Hardly anything back then. Higher now. We'll have to see. It might go down with increased demand for their commercial properties. We'll compare that to Melbourne. Boom. Compare it to good old Sydney. There you go. And why not? We'll chuck Brisbane there. We'll pretend Brisbane's important. Just for me. So you can see, guys. You can see Canberra is, a different kettle of fish. Let me know. Do you work in the construction game in Canberra, guys? Are you a tradie there? Are you getting ready to try and get into the commercial refurb market? Canberra is set to be the only CBD office market to record rental growth in 2020, while rents in other capital cities decline under the economic strain of the pandemic. Real estate services firm JLL forecasts Canberra will buck the national average of office rents falling by 7% over 2020, with net effective rents, which take into account incentives such as rent-free periods, provided to tenants, of 1.1% over the year. No other CBD market is forecast to record rental growth. A decline in rents of 9.5% is forecast for the Sydney CBD. Wow. That's big. Over the calendar year, while a softer fall of 5.5% in Melbourne is expected, accounting for the city's lower vacancy rates. JLL's ACT manager, Andrew Balzanelli, said the stability of the public sector, there you have it, in Canberra has traditionally bolstered the market's economic resilience to external shocks. So, are there any... There have to be some real estate investment trusts that purely focus on government assets. We've read it before too, more and more, where businesses or trade, there's been demand for government buildings, government assets. What does that tell you about hope for the future and uncertainty there? Unemployment in Canberra is starting at a low base of 3.5% at early March, the lowest nationally and due in large part to the high levels of public sector employment, he said. Employment within the Australian public sector has aligned very closely to the 06-07 level since the 15-16 federal budget. Canberra was one of just two CBD office markets to record positive net absorption of 22,300 square metres in the first quarter of 2020. The city's office vacancy rate is now at its lowest point since 2009 at 8.9%. Well, and remember we were just looking at during the recession Australia had to have, 1990s. And that was during a time when it was harder for people to work remotely. The Australian average was over 20%. So these civil servants, I think in many ways, are just not going to encounter the realities of the rest of the economy. And I think that filters through to their thinking, that filters through to the policy decisions they make, that filters through to the conversations they have at the pub. And that manifests itself in political decisions and arguments which a lot of us just don't seem to understand, probably because we're living in a different world. While Canberra's large exposure to the public service is expected to protect it from a slowdown in the private sector, the same can't be said for some of the other capital cities. Analysts from Citi said while the Sydney and Melbourne office markets had entered the pandemic period in a strong position, with low vacancy rates and high rents, several factors including a decline in job ads and net absorption lower than the long-term average indicated market rents were likely to fall in the near term. There is a long-term uncertainty around the impact of social distancing measures and the adoption of work-from-home practices on the office market. I mean, we used to have a little commercial tenancy out at Yeronga, which is about half an hour in peak traffic from where I live. Not much, but that adds up. That adds up. And about 2 years ago, we scaled back the business, moved back home, set up in the studio here. And, Rachel and I can work here together. If I need extra support, I can call on people remotely. And I just love not having that commute. It's not even... half an hour is a pretty weak commute. I shouldn't really be complaining about it, but I love not having it. It's one of the reasons I started doing my YouTubes in the morning. I had the time. Let me know of your horror commute stories and that you're avoiding now because working from home. Are you going to push to work from home more? Be crazy. And so long as confidence is there and people can, are producing, why not? You save money, save time, have more time with your family, more time with the kids. After I record this video, I'll go upstairs and, probably spear tackle one of the kids on the bed and have a play with them. We'll see. On balance, Citi expects demand to be slightly lower, forecast a small decline of 1% to 2% in office occupancy. Overall, we believe working from home arrangements may increase slightly versus pre-pandemic levels, but are unlikely to significantly reduce office demand longer term, while other workplace practices like hot desking could significantly reduce or be abolished altogether. Office asset values could fall by more than 15% as a result of a fall in income and cap rate decompression, the Citi analyst said. JLL, head of sales and investment in Canberra, Tim Mutton, expects prices to remain strong in Canberra for high-quality assets with public sector tenants or those with exposure to the sector. A minor softening in pricing is forecast in lower quality prime-grade assets, where questions around short-term sustainability of their income are more likely to arise. Well, there you go, guys. So, other cities are going to cop it, but Canberra is a safe haven. What do you think? Do you think we're going to see some lasting changes here? And how will this manifest in other parts of the market? I'm a fan of working from home, but I certainly have my biases. Do you think it'll affect property markets? Or maybe, will we see a rise in more business clubs in the city, more membership? You can go in there for your meetings, your coffees, and your presentations. Have the best of both worlds. As always, let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and you'd like to support us, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us via affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can use Gold Pass from the Perth Mint, support us via buying our merch, or you can also use PayPal. Thanks, everyone. I'll see you in the next video.